Hello, and thank you for joining us at XM.com for this Forex Preview video. The RBA meets early on Tuesday, and policymakers are widely anticipated to deliver a 50 basis points rate hike. But how could the Aussie react, especially given the slowdown we're seeing in China currently? I'm Cristina Marujos. Joining me today is our senior investment analyst, Haralambos Pisuros. Haralambos, markets seem split on a 50 basis points rate hike by the RBA, given the decent economic data we're seeing out of Australia, and of course, inflation staying well above the RBA's target range. Therefore, speculation is that policymakers will have to go for the higher, the bigger half-a-point rate hike. What are we likely to see at Tuesday's meeting?
Good morning, Christina. Yes, indeed, the probability for a half percentage point hike now rests at 67%. With the remaining 33% pointing to a quarter-point increase. In my view, with the headline CPI rising to 6.1% in the second quarter and the Melbourne Institute projecting that it will stay near those levels in 1 year's time, a 50 basis points hike may be even more likely than the aforementioned probability suggests. However, such a hike by itself may not be a reason for major market swings, as, according to the mentioned probabilities, it is the base case scenario. In other words, this is what is mostly anticipated. So, if we do get a 50 basis points hike, I believe that traders may place more emphasis on the accompanying statement for clues as to how the bank is planning to move forward. Although investors expect another half-point hike this Tuesday tonight, they forecast a path of more or less quarter-point increments from their own words. Therefore, for the Aussie to gain notably, the bank may have to appear brave enough to continue with a few more double hikes.
Speaking of the Aussie, of course, it is taking a hit from the slowdown we're currently experiencing in China, but can the RBA offer it any reprieve this week?
That's an excellent question, Christina. As I already mentioned, the Aussie could enjoy decent gains if the RBA indeed sounds hawkish, but in a risk-averse environment, the risk-linked Aussie may find it hard to sustain any gains against its US counterpart. Apart from China's economic risks amid a battered property sector and the resurgence of COVID, let's not forget that the Fed appears to be more aggressive than the RBA. Having said all that, though, despite the Aussie possibly turning south again against its US counterpart due to risk aversion, it can keep outperforming currencies whose nations are facing bigger recession risks, the likes of the euro and the pound. It may also keep outperforming the Japanese yen, which has been hurt badly this year due to the Bank of Japan's decision to maintain an ultra-loose monetary policy strategy. After all, year-to-date, the Australian dollar has been the third best performing currency behind the US dollar and the Canadian dollar. So, even if it comes under some selling interest against the US dollar in the aftermath of the RBA, I see decent likelihood for the Aussie to perform better than more wounded currencies, the ones I mentioned, euro, the pound, and the yen.
Haralambos, thanks so much. The Reserve Bank of Australia meets early on Tuesday. This was a Forex Preview. Thanks for joining us at XM.com.